This video is a review of 7&I Holdings' fiscal year 2024 full-year financial results, period from March 2024 to February 2025. 7&I Holdings Co. is a Japanese diversified retail group, established through the integration of Ito-Yokado, 7-Eleven Japan, and Denny's Japan. The company operates a wide range of businesses, including convenience stores, grocery stores, department stores, financial services, and restaurants. Summary for fiscal year 2024 and fiscal year 2025. 7&I Holdings achieved its revised consolidated financial targets for the fiscal year 2024. For fiscal year 2025, the company anticipates a substantial increase in consolidated net income, primarily due to the completion of its group structural reforms aimed at streamlining operations and improving profitability. Additionally, as part of its strategy to enhance shareholder value, the company has established a share repurchase program of up to 600 billion yen, as previously announced earlier. FY2024 Consolidated Results Highlight. In fiscal year 2024, 7&I Holdings reported revenues from operations of 11,972 billion yen, marking a 4.4% year-on-year increase. However, operating income declined by 21.2% to 420 billion yen, and net income fell by 23% to 173 billion yen, resulting in EPS, earnings per share of 66.62 yen, a 21.5% decrease compared to the previous year. Although it managed to achieve the annual forecast, there seems to have been some capital sales for profit increase, and EPS also fell. FY 2024 was a difficult fiscal year for 7&I. FY 2024 Results by segments. 7&I's main business segments are domestic and overseas. 7-Eleven operations and both segments saw a profit decrease in fiscal year 2024. Domestic CVS operations refer to its 7-Eleven convenience stores in Japan, focusing on local convenience retail. Overseas CVS operations include its 7-Eleven convenience stores outside Japan, mainly in North America and parts of Asia, operated through subsidiaries and franchise partnerships. In fiscal year 2024, 7&I's domestic convenience store operations saw a 6.8% year-on-year decline in operating income and a 4.7% drop in EBITDA, while the overseas convenience store segment performed even worse, with operating income down 28.3% and EBITDA decreasing by 5.9%. Highlighting overall weakness in the convenience business, particularly in international markets. FY 2025 Consolidated Financial Forecasts. For fiscal year 2025, 7&I Holdings forecasts revenues of 10,761 billion yen, representing a 10.1% year-on-year decrease, while operating income is expected to rise slightly by 0.7% to 424 billion yen. Net income is projected to grow significantly by 47.3% to 255 billion yen, with EPS, earnings per share, expected to increase by 53% to 101.96 yen. Significant profit recovery is expected in fiscal year 2025 after group restructure. Shareholder return. For fiscal year 2025, 7&I Holdings plans to increase its annual dividend per share to 50 yen, a 10 yen rise from fiscal year 2024, and enhance total shareholder return by conducting a share repurchase of up to 600 billion yen, targeting a maximum of 400 million shares between April 10, 2025, and February 28, 2026. 600 billion yen share repurchase will be roughly 15% of outstanding shares, which is great for shareholders. Increased capital return for shareholders. 7&I Holdings has announced a strengthened capital return framework, beginning with a 600 billion yen share repurchase in fiscal year 2025, primarily funded by proceeds from the recent sale of its Superstore business group. They also plan to repurchase an additional 1.4 trillion yen from fiscal year 2026 onward, aiming for a total of 2 trillion yen in buybacks by fiscal year 2030, alongside a commitment to steadily increase dividends, reflecting a significant shift toward an enhanced and more proactive capital return strategy. In order to counter takeovers, Seven & I is restructuring its corporate group and is more proactive than ever in returning profits to shareholders in order to raise its stock price. Alimentation. Couche-Tard, a Canadian convenience store operator, has previously made a takeover bid for Seven & I Holdings. Seven & I has expressed concerns about potential antitrust issues, particularly in the U.S., where both companies have significant operations. Seven & I's recent financial struggles, including declining profits, have weakened its ability to resist the takeover bid. They are aiming to boost its stock price and strengthen its position by increasing dividends and launching a large-scale share repurchase program to enhance shareholder value and investor confidence. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 2,026 yen as of April 10th, and the US dollar stock price is $13.48 as of April 9th. Current PBR is 1.3 and PER is 20.6. Dividend yield is 2.47%. Compared to the last few years, all PBR, PER, and dividend yield show that stock price is relatively lower. The stock price rose temporarily after the TOB was announced, but after it became clear that the TOB would not be carried out, it remained at around 2,200 yen. Although the stock price has been volatile since Donald Trump's tariff announcement, Seven & I's stock price remains relatively cheaper. Conclusion. FY2024 was a tough year for Seven & I due to the acquisition attempt by Alimentation Couche-Tard and declining revenue and profits across both domestic and overseas convenience store operations. However, the company's commitment to shareholder returns, through large-scale share buybacks and progressive dividend increases, offers some reassurance to investors and signals a strategic shift toward enhancing corporate value and defending against takeover pressure. FY2025 marks a fresh start for Seven & I following its group restructuring, and the focus now shifts to how effectively the company can execute its renewed strategy and improve performance moving forward.